The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials up 100, Nasdaq up 25, S&P's up 7.5, gold contract up $8.20, trading at $13.09 an ounce. We have silver up 9 cents, $15.41 an ounce. Light sweet crude flat, $59.22 a barrel. Notes and bonds, you get the 10-year note down 4 ticks, 122.23. 30-year bond down 20 at 145.16. King dollar down 108 ticks, 95.815. The euro is at 113.51 to 1 U.S. dollar. The yen is at 111.5, and the pound is at 132.52 to 1 U.S. dollar. We get Brexit.
10-day countdown.
10-day countdown. Hey, do you have any rules from 1604?
I got one rule I found out about yesterday. I don't have it. Great Britain, they got it over there,
1604, man.
No voting on the same bills.
No voting on the same bill.
You better switch it up.
Parliamentary rules rule the world, folks. Bureaucracies, It's all about parliamentary rules.
That's right. How do you get things done?
You gotta love it.
Yeah.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade to Think or Swim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand option strategies, futures, all of the above. If you want to understand how they traded options in 1604, well, guess what? We got it right here. I
want to hear this one. Perfect.
We got it right here, man. I'm putting them on the spot. Kevin Hinks, what's going on?
Point of parliamentary procedure, gentlemen. That's what's going on here today. No, actually, traders hate days like this, guys, because we're waiting for the Fed. It's the first day of a 2-day meeting, and you got to sit around and wait. And trading, whether you want it to be or not, direction is one thing, but trading is a little muted.
Right.
Going into the Fed decision, and you're waiting. So these days are always frustrating for traders.
And, what happens this year, folks, is that we got a 2-day meeting starting today, ends tomorrow, and we have a press conference.
Right.
So, it's going to be like, okay, what are they, what is the conversation going to be about, right?
Exactly, and how transparent is Jerome Powell going to be? There's a couple new things that you get now from the Fed forecast. You now get when they expect rates to move next and where they think they'll be in 2 years. So that's kind of a new thing that you're getting from the Fed forecast. So that'll be interesting. But I believe that the market will move based on what they say. But I don't know if stocks will move. Bonds certainly will. How about the move in bonds this morning, Tom? Around 6 o'clock Chicago time, about 7 o'clock your time. Pretty substantial sell-off here in the third year.
It was quick, man. When you take a look at this, what Kevin's talking about, that baby went south, took out the low of yesterday, and we're above it right now. But that was no doubt a quick move. I was, last night, Kevin, when I heard that they were pushing a 1604 rule, I says, okay, man. Like, I really thought last night that the currency moves, I didn't know which way they were going to go, but I thought we would see more volatility. I really did. Because, that's really saying that, hey, they got a battle going on here, man. I mean, it's a big battle, so...
Right. The one thing that Ben Lichtenstein and I were talking about is, no one knows which way it's going to go, but we think it'll be volatile for sure. That's one thing you can bet on is some volatility. I mean, obviously, if they get a Brexit deal done, I think the U.S. dollar sells off and the British pound and the euro rally.
Right.
But besides that, it's just going to be volatile. I don't know which way it's going.
No doubt. Now, if we get back, if we look at the Nasdaq, these chips, man, they get some action in them. AMD is up 5%. You get Nvidia up 3%. Micron's up 2.2, and that sector, has definitely kept the Nasdaq and the NDX 100 the strongest indice out here. So
yeah, these semiconductors have been moving, that's for sure. I mean, remember, they all broke pretty hard, too.
Yes.
I mean, Micron broke. It was above $41, and then it got down into the high 30s before it turned around here. But, yeah, they're all pretty – they've had a nice week here in some of these. Obviously, NVIDIA's deal gave that stock a little boost. But yeah, these names have been moving all over the place, and they're all for some retail investors and some traders. They look kind of cheap. They're way off their highs, all of them.
No, there's no doubt. And then we get Apple. Apple is, if you can keep track of their products, I mean, it seems like they're coming out with a big day, but the other side of that is they get a lot of products now too.
Yeah, and I think what's going to really take over some of the discussion today is Apple and Netflix. They're getting into a little spat here about their Netflix doesn't want to put their content through Apple TV. So I think that's going to be a little give and take between them two. We'll see how far that goes.
Yeah, that's interesting, man.
Yeah.
I wonder, does Apple have any traction on their Apple TV?
Well, they get the event coming up to talk about their programming later this month.
Where they're going to announce it,
Yeah.
and Netflix kind of preempted them, saying, and Reed Hastings was very clear, we want our customers to look at our content on our platform.
Yeah.
Right.
I would be wary of handing over the keys to Apple, too.
Oh, yeah. Yeah.
Right. Why should they assist Apple as long as they feel comfortable with people going through their own platform? Why should they assist Apple in building out their own streaming TV against Netflix?
I agree, totally.
Oh yeah. They'll just use them and abuse them, and then
that's how it
say,
goes.
See you later.
Exactly.
I mean, you can see that in a heartbeat. And you know what? Netflix to me is still so inexpensive and so accessible.
I was watching it last night.
It's unbelievable.
It's great. It is.
I saw my bill go through last night, $11.20.
Right.
It's like, really?
They have that pricing power, right?
For everything you pay for, your regular cable bill and everything like that, $11.20 seems very manageable.
It's unbelievable, and they have so many programs that you couldn't go through them all. I mean,
I can barely keep up with one of the ones that I just want to check out.
Right.
Like I have like 2 or 3 shows just waiting when I find the time. But I don't watch a lot of TV, right? But exactly like you're saying, it's so much.
Now, Kevin, when we look, there's no doubt that the insurance in this market, VIX-wise, this baby is laying down there. I mean,
right. Well, what you guys have to look at is a couple things. We're in a grinding higher market.
Yeah.
And it's getting into late March, early April, and getting into spring and summer, where
Summertime.
implied volatilities normally trade a little lower, in a little lower range than they normally do. So, a 12 VIX or just below a 13 VIX seems pretty cheap. But guess what? If we continue to grind higher like this with interest rates and the Fed on the sidelines, it could go lower. Now it's not going to go a lot lower, but it could get to in the 11 range or late spring or early summer. So volatility here, you're right. Insurance is cheap, Tom, and getting cheaper.
Yeah, it's so cool that you brought this up because we've been doing business so many years now. I remember one of the first shows that I had heard when you do it with Scott, and that's what you were explaining as coming up to the summer, like, hey, man, and then remember the VIX was even lower, like, you think it's low, it can get lower, okay, it can get lower.
And it can sit there
lower,
right? And VIX, when it spikes up, goes much higher than the normal average, but it goes lower and stays there longer, and that's how you get to an average of about 15.39 is the all-time average.
Lower and longer.
Hey, we'll see what happens. Summer trade.
Folks, right here, 45 minutes from now, you want to understand option strategies, upside down, great program. Kevin, you have a great one, safe one. We look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thanks, Kevin.
You. Stay right there, folks. Tommy and I come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 139. You get the Nasdaq up 35. S&Ps are up 11. And yeah, as we were just talking with our man, Mr. Kevin Hinks, the Fed meeting today.
Yes.
Actually, let's do this first. We get the dot plot here, but what I want to do is I want to go at the Fed Fund futures and take a look at them first. So look at this. So when you take a look at the Fed Fund futures, let's see, we're right now, we're at 2.25 to 2.5.
Correct, yeah. And so these are the meetings, right, going down the line, with tomorrow being the end of this meeting when they announce. So you basically have a 0% chance of either one, right? With the 99.2% chance it remains exactly where we're at. So this is where we're at, and this is where you can see the decreasing chances we stay, and all of the odds are on a decrease, right?
Yes.
I mean, you have marginal here, that there's less than 1% chance we're going to hike all the way through 2020, and there's an increasing chance from 2 to 10 to 20 in October of 19 that we actually come down a quarter basis. Yeah.
Okay.
Yeah.
So that's...
But realistically today, 0 chance of any change.
Right. That's the Fed Fund futures. Now, if you go to the dot plot, and this is the...
So here's where we're sitting, right, between the 2.25 and 2.5, all of them.
Right.
Yeah. And this is as we begin to move throughout, I'm just trying to, each year, right, where we're going to be. And it's interesting how when you get to 2021, the disparity.
Yeah, they're saying they're peaking out.
Well, no, I just that you range from 2.4 all the way up to 3.6. Even if you're finding a median in the middle, you really don't have a consensus. Just interesting. There's really that's going to change a lot. There's you have 4. Is this each governor, right?
That's what I don't know.
I believe it is, okay? So that's why the disparity is something that's interesting, where you can find a median, but keep in mind that you got 4 at 2.6 or under, and you have 3 at 3.4 or above.
Wow.
Yeah. Yeah, and pretty similar when you're talking about just 2020, and we're in 2019.
That's pretty wild.
Yeah.
That is... Hey, we'll see where this baby is shaking out. There's no doubt. And right now, look at that. I mean...
Yeah, so we're looking at the 10-year. We're down 6 ticks. We're trading at 2.62. Keep going over at the low 2.553, and even if you pull it back the year, high 3.2. And then the 30-year, because the 10 years off 6 ticks, 30 years off half a point, I believe. Yeah, 17 ticks now. So we're sitting at a yield of 3.04 for the 30-year, and we're about 1/10 off the low, with the high being almost 3.5.
Yeah.
I mean, it's a legit 0.4% off of that yearly high.
That's a monster, man.
It is a big number for 30 years to adjust.
30 years on 100 grand.
Right.
That's
even many more, right? Usually you're doing 200, 300, 400 for your just your home.
So we'll see. We got a question here about this one right here. The S&P lost 1.5 trillion collective market value. Let's see what that's saying. Since the beginning of 2018. So the S&P lost 1.5 trillion collective market value since the beginning of last year, according to recent analysis by the numbers. 8 out of the S&P 11 sectors lost market cap value, with companies like Exxon, Wells Fargo, Walmart seeing their market cap shrink by more than 40 billion. Interesting, man.
Yeah.
The utility sector was the only sector to see a double-digit market growth, with companies like NextEar and Duke Energy, yeah, they keep going up on our bills down here. Interesting, tech still dominates the S&P by a wide margin, despite losing 90 billion in market cap. It's interesting how the tech sector is 12 times bigger than the smallest S&P sector. So, you know, even though you get your market, well, let's see. With that saying that we do have markets near highs, yet that's interesting, isn't it? I mean,
so
that's how big markets actually are, I guess, right?
Yeah,
you know?
yeah.
Because, you know, we're still right next to the high, but guess what?
We are.
It's trillions of dollars.
Yeah.
You're only going to be down a little.
Right.
You know, that I got the cash
for sure.
up. We're down from 29. Yeah, we're down 100 points from the high.
Yeah, because you're talking about 500 stocks. So,
yeah,
you know, if they're each down, I don't say only $1 billion, right? But they're mammoth companies. They just each pull back $1 billion.
Yeah, that's nothing.
That's 500 billion. So really, that's an average of $3 billion a decline for those companies. Barely 1% for a lot of companies, 300 billion, right? Let alone you have companies approaching $1 trillion, like Apple, Amazon, Microsoft, Google.
And if you look at Apple. Now, that's going to be an easy one, because we just go to 1 trillion and then say, okay, it's 886 million.
Can you go back to the chart for a second? Right. I just want to see.
Which one?
Just the GPO. I just want to see since the beginning of 2018. Right. So that's where, this is where, wait, where are we? No, we're not back far enough? No, we're not back far enough. Where are we going here?
Daily. Yeah, you can hit that. You can hit the
1 year. That's going to get us.
There you go.
Yeah, I just, no, we're going to go 5 year. I wanted the beginning of 2018 to see where we're sitting, right? So you're actually above that level, which is interesting. So they're adding market cap
from that time.
From that time. I was just looking because
I'm with
a company like them could drop 20 billion and not even feel
in a heartbeat. Yeah, right. So Tesla, folks, good old Elon Musk, he definitely thinks the rules don't apply to him.
Is he out there talking again?
Well, this is what happened.
I saw headlines out there, but I'm almost immune to the headlines.
Well, this is what happened is the SEC basically, you know, subpoenaed the guy that, you know, supposed to be taking care of his tweets, right?
Okay, I didn't know there was such a man, but...
Yeah, they have one person that works for the company,
I'm sure
an attorney.
Title. No, I'm being sarcastic. Okay. I agree, I'm sure. I'm just...
And the bottom line...
He's obviously not...
Is that, no, he didn't do it.
Then he didn't approve it?
No.
Of course he did. That's my cynicism.
He didn't approve any of them.
That's my cynicism right now. And there's a guy, of course he didn't. Nobody would allow him to tweet that 500,000 car tweet.
So the way that it works is that, which it didn't supposed to work, that's why they're going to try to get him on contempt of court, is that he just would wait until, you know, real time.
How is the SEC stunned? I mean, I'm sitting here being so cynical because, of course, there was nobody reviewing that tweet.
But this is all the tweets.
Okay.
He was under a court order.
Yes.
And so what they did is that the board put a an attorney in charge of this, right?
Sure.
And bottom line is that he didn't review one tweet, none.
Yeah, I mean, that's a problem. So, yeah, they said they're stunned, did not seek pre-approval of any of his tweets about Tesla in the months since he was ordered by a judge to do so. So Musk's August tweets about taking Tesla private resulted in $40 million in fines, the appointment of 2 independent board directors, and the replacement of Musk as chairman. He settled that, approved by a judge in October. Called for Tesla to designate an attorney to pre-approve company-related tweets. I mean, this is just
the company appointed one in December, but the person monitoring the tweets in real time, not approving beforehand.
And I was going to say, this is the lack of corporate governance. We've seen it many times with the boards really failing here.
Right.
This is what the board is supposed to be doing, and we see when they have a weak board, bad things can happen.
Right.
So the agency on Monday, and this isn't the bad things, right? It can get a lot worse. That's when you see everything that can go wrong, when a board just doesn't do what they're supposed to. The agency on Monday reiterated its request that the judge find Musk in contempt, saying it learned that the CEO had not sought pre-approval for a single one of the numerous tweets. I mean, it's a lot of gall. I think he's gonna get him. I would agree. Such brazen disregard of the court's order is unacceptable, and I agree. You can't. What's the point of having a judge do anything? So requesting permission to file a response by March 22nd, Musk's attorney. So that's going to play out. I don't see how he gets out of that one. He was pretty reckless.
Stay right there, Tommy, and I come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now trading up 120. Nasdaq is up 20. S&Ps are up 7.5. Let's go over to our man, Mr. Darrell Martin from Apex Investing. You can reach Darrell every trading day, folks, at apexinvesting.com. Darrell Martin, what's going on, brother?
How you doing, brother?
Morning, Darrell.
Good, man. Yourself?
I'm doing fantastic.
Hey, do you have any 1604 laws that are applicable to trading?
I do not.
I'm telling you, man, that's as good as you can get. Just absolutely amazing, no doubt. So, I mean, I guess with the European Brexit, we'll see whether they got another year to wait or what we're gonna do.
Find out.
Yeah, the drama continues. It's like getting a soap opera renewed for another year, you know?
Yes.
It's so true.
The second season. We'll call it the fifth season at this point.
Yeah.
I'm telling you, the thing that
The longest ever breakup.
I'm surprised that there's not a lot of movement over there, though. That's what I'm surprised about.
Oh, it's just been quiet.
Yeah. So it's like, out of nowhere, is there going to be, maybe Theresa May has an English expert that she can arrange how that bill can be so that the House of Commons can't stop it from coming up again.
I bet they're digging through all those regular, the
Right.
parliamentary procedures, right?
Right. Because it's just amazing, man.
Yeah.
I mean, the whole thing's
That's
amazing.
gold.
I'm sorry, gold?
So we had a pretty nice move on up, and it's been a little bit choppier than I like this morning, but still not too bad.
Yeah,
So
it's...
I know you like digging into gold.
No, there's no doubt. And what we need out here in gold, folks, we need more volume. What's happening here is that the downdraft out there on March 1st is basically stopping on its tracks. We had a question out here, about the impact of higher rates on gold. Maybe we're hitting a temporary low in the yields. I don't think we're hitting a temporary low in yields, because if you go over to, like, the notes and bonds, folks, did get hit this morning right off the bat, but when you pull this up, what you're going to see is that, we pulled back. You get the first 820, you had 6,700 contracts, but you were going into strength out here that had 51. Then you got into a low with only 23,000 contracts. So it's like, that's rejecting lower price already. So,
Well, we got the Fed funds rate coming out tomorrow with their, little speech and their little dot report, which, are they going to have one more rate increase? Are they going to have no more rate increases? I think that is, we'll start seeing gold move a lot more after that as well. So we got the 2 and the 2:30, speech coming out tomorrow afternoon to be aware of.
Yeah, and Tommy and I, we just brought up the Fed fund futures and then the dot plot. The dot plot, man, their average is a lot higher than we're even at right now. I mean, if you look at that dot plot, it's like,
Sure.
They're at look at that thing. I mean, they're already, we're 2019. We're in 2019. I mean, they're looking at, we should be at 2.8 right now.
Yeah. Next year, right?
Well, I'm looking
Oh, yeah.
right
No, I
there,
see what you're saying. Yeah. By the end of the year, I'm sure maybe that's what.
Oh, I got it. Okay.
Yeah.
Okay. So, see, that's the one more. That's what's going on there. There's 5 of them. Yeah. Interesting.
Yeah, factoring in one more additional coming in.
Yeah, they pull.
And then we got what do you got after the close? We got FedEx coming out, so that'll be, I think, their forecast. I think will be the important thing about what they say. Looking at just the globe, because they touch every part of the globe.
Oh,
yeah.
There's no doubt. And
so, what are they looking at for their business and ramping things up or scaling things back based on what they see happening, globally in all the economies with all the trade wars, everything else happening right now.
Is Amazon going to eat into their business?
Well, what's amazing is that if you look at FedEx and UPS, right, they both have been going up in revenue and up in actually what they're making, but as to percentage of what they're getting, Amazon is eating them alive.
Okay.
So what ends up happening is that the pie is much bigger.
Sure.
You know what I mean?
Everyone's shipping online products, right?
Everyone's shipping online products, but Amazon is eating into them in a huge way.
I bet.
You can see it.
Amazon's going to build their own.
Oh, yeah.
They're their own Army, their own Air Force. Well,
they basically almost have it going. I mean, now they've got all the delivery drivers that they have. They set up with the business to do it. So they're in a lot of ways they are starting to do that with all the local warehouses.
I said to my dad last week. So I had ordered just nothing, a $5, as in a $5 screen protector for my phone. So not a valued item at all. It's almost as cheap as you get delivered from Amazon, literally $5. And Daryl, I was getting notifications on my phone, and this was a new thing. I have the Amazon app, but this is new. It's 9 stops away from your house. And then I get a notification that pops up with a picture of the package at my front door saying it's been delivered. That's leaps and bounds ahead of what UPS or FedEx is doing, and I think it's probably one of those trucks like you were referencing, one of their Amazon deliveries, where they are incorporating much more even technology into the delivery. And once you get used to that, the U.S. Postal Service can't keep up with that. FedEx isn't taking pictures of my products and I don't have a FedEx app. They're coming. They are.
And those...
Well, I mean, you think about it, they really want to take it to one more level as they get that bigger network going. Oh, sorry, if they want to take that to one more level and get it going, I mean, all they have to do is, start allowing you to actually ship things yourself.
Oh,
so,
yeah. Right. Yes.
And they can easily become a carrier for people shipping things out of their house.
Empty trucks. Sure.
Well, yeah, it's just like Amazon Web Services, right, where they build it for themselves, and then they have such a network that they begin offering that as a service. Same thing. They built out their web service for their own ability, and then they had such capabilities.
Oh, my God.
They said, why don't we do that, right? They build out the delivery network, and they're great at
Well, why not have people picking up when they're dropping off and bring it back to warehouses that can ship all over the place really fast? So.
And they already talk about if you just want like one delivery a week, let's say you order something a couple days and you're worried about the carbon footprint or something, you can designate a day where no matter when you're ordering stuff, we're only going to deliver you like once a week. So like Wednesdays, you'll get whatever you order from Amazon. They just have all these options, as in you can't do that.
Have that. Wow.
Yeah.
That's
have all that technology like automatic.
Did we lose him? Okay, I didn't know if it was my headphones or no.
No, sorry. So to have that autopilot there is amazing.
Yeah, you can see that. And just like you said, it's the technology. That's what I couldn't believe, that they took a picture and sent it to me. And this wasn't a TV. That was my point. It was as cheap as it gets. So that means it's every product across the board that they're incorporating that technology. Pretty cool. Yeah.
That's amazing, man. It really is amazing. And, you can see... Now, you want something picked up, you take a picture, they pick it up, it matches up.
Not far off, right?
It matches up on the deal.
Not far off at all.
You're off to the races, man.
Yeah.
Unreal. Well, we'll see what the good old Fed's going to be doing tomorrow afternoon. I mean, rates out here, bottom line, 10 years down 4 ticks, 30's off 21, but there's not much out there. You got the semis are moving a little. Other than that, the currencies, man, it's blowing my mind with let me just see, the pound is still just laying there.
I was going to say, and then we'll just see what, because at some point we're going to get something in the next 10 days, which is interesting for the first time, and it might just be an extension, which is what it looks like, because it's pretty calm, as we've said.
Yeah. Imagine anyway. Politicians and politicians.
I would like some volatility with all this FX.
And we could get some.
I'm really surprised that we don't have
I agree.
Yeah, I really am. Listen, Daryl, thank you so much. You have a great one, a safe one, man. Appreciate it.
Hey, thank you.
Thanks, Daryl.
And you can reach Daryl, folks, at apexinvesting.com. We have the Dow Industrials up 145, NASDAQ up 27, S&P's up 9.5. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 137. You get the Nasdaq up 25. S&P's up 9.5. And let's go over to Boeing. We take a look at Boeing. So Boeing up $5.50.
Ah, look at that.
Yeah.
They out of the woods? Everything over? Okay.
Nope,
No,
I don't think
maybe
so.
not. Maybe not.
Let me tell you something. This is a big deal here.
Yeah, I was actually surprised to see them trading higher because I had heard the talk about this. Go for it.
And what it is, folks, is China is looking to exclude Boeing troubled 737 jet from a list of American exports it would buy as part of the trade deal with the U.S. And you can see that. That's a legit deal. Now, they'll probably, I don't think you'll get away with that, but they'll probably try to put something in there once it can fly in again, you know what I mean?
I guess. I mean, they were the first one to come out and ban that plane, just
totally.
to keep in mind. And there was, I was listening to some conversation early this morning on Bloomberg and just talking about how, China's, whatever their FAA similarity is that they almost led the way on this one, and that they might be the one, unfortunately, in the future that might try and find that niche that they might, because this was quite an opportunity. And just that how that ties in is that if they really want that role, they might take a stronger stance on this plane to make that impact. Like, we were the first ones, this is unsafe, we're not going to be, so it'll be interesting.
They're showing that the battle's on, and the leadership battle's on. There's no doubt about that.
Now, another great point I heard in the conversation, listening to just some analysts on Bloomberg, was just that it's not that simple, though, just to cancel your plane and say, I'm going to buy an Airbus plane. Right. Because there's huge backlogs on that. Right. And everybody, they can't handle that right now. You can't just say, you got years and years and years and years and years. And if these, whether it's China, whether it's companies buying it, if you want to hit your profit targets, you need a plane.
You do.
And so even if they might look at doing away with the MAX, they might go into another Boeing plane.
Yep.
And that's kind of what's holding up Boeing. And there's a lot of validity to that, I think, from my very little understanding of the fundamentals of plane buying. But you see the lead time. And Airbus isn't, they're not poised to handle hundreds of planes. You can't do that. So what do you want? Do you want a plane or do you not want a plane? You want a plane.
Yeah. Used planes went up dramatically the day this happened.
I bet.
Plane brokers there in,
Oh, good spot, right?
Good spot, right. Because there's plenty of other planes that, they're older, but the bottom line is that they have a good track record.
Sure, they're still sellable, right,
For sure.
Yeah, I'm sure.
What I mean?
Because planes, they can last for sure. But,
I'm telling you. pretty.
On the other side, if you're Airbus, you better be figuring out how to build as many planes as you can right now.
Right.
Because you do have that opportunity, and that window is usually small.
Oh, there's no doubt.
Yeah.
Let's go over and take a look at the dollar. So what you have out here, folks, is that no matter what the Fed's going to say tomorrow, it looks to me like this dollar's going to pop again. I mean, I've seen anemic volume, but this is really anemic volume the last 2 days. I mean, there's no sellers in here.
So if the dollar pops, what if the pound crashes? If the pound crashes, what's that mean it's going to happen over in... They're going to fall apart in hard Brexit? No, I mean, but but who knows?
Something's going to, I mean, look at this, okay? So, you know, we had come down, and this was when we were swapping contracts, but bottom line, you had some volume, 21,000 contracts, right?
Yes.
Then you tried to go up, and you went up with 21,000.
Okay.
Now, look at this.
Yeah, no, definitely.
Yesterday, we did 7,900.
Yeah.
Now, it's 64 now, so we'll do like 12,000.
Sure.
That is, I mean, that's anemic, folks, okay?
Yeah.
So when that happens, realistically, you get a bounce. I mean, it's not take much. So that'll be maybe the Fed tomorrow.
Yeah, and it could be either. I was just kind of throwing it out.
Oh yeah, no.
It's remarkable that it's 10 days. We're gonna get something, and it might be just an extension for 3 months. It might be an extension for a year. There's gonna be some type of facts coming out. The market probably will react a little bit, at least, right? I mean, it should.
No, and you know, when you take a look at, you know, the British pound, you're at the top of the range right now.
Definitely.
You know, so it's like, okay, you're gonna bust out or not. You go over to the euro, and you know, the euro's basically hanging there too.
Yes.
You know, so.
Yeah. And they were just adding, even in the den, talking about Boeing and saying China doesn't need Boeing any longer. And one thing they added to the conversation I found interesting is that it's going to be part of the trade deal, but that's a very short-term fix, because what's happening is that Boeing has their own aviation company that they're bringing online. They're going to build their own planes. You know what I mean? They're not going to need to buy Boeing planes in the future. That's already in the works. Excuse, China has. China has their own aviation company that's going to be building planes.
Right.
So it's part of the trade deal. It's a pretty short-term fix. And so China knows that they're going to be able to make their own planes soon. They just have to get through this kind of period of starting their own company.
Get the technology going.
Exactly.
Yeah, and so let's go over to the small caps. So the small caps, you know, no doubt, still the weakest index, and you can see out here today, you know, hasn't, bottom line, even got, not that one. What a, get out of there.
Now you can do it, I think.
I know. You know, the downdraft out there of the 6th. The high is 156.08. We hit 156.53, and now you're at 155.52.
Okay.
That line is what is pretty wild here for the market. You know, it keeps grinding higher, but this small cap is really weak. I mean, it's you know, when we look at the Nasdaq, here's October 10th. The Nasdaq was by this morning. That's 160.
Yeah.
You know, if we take a look at the Qs. What's that number there? 178, and we're above it.
Yes.
179.18.
Yeah.
You know, but you can see that the width or the length of the bars are tiny, and that's always, you know, length of bars, trading bars, folks, are important to look at, because when you get them tiny for so many days, at highs, most of the time it wants to go low.
Sure.
When you see that at lows, that's when something wants to go high, because it's like, okay.
Yeah, a little bit. Can't really get a huge price action to the upside, but just creep.
And the S&P today, I mean, my take on this today, if I'll show you this is like pretty intense, because my take on this today is that if this S&P, you know, could get higher, you could have a heck of a rally. And I've been putting in the newsletter that, hey, listen, man, if the S&P can get up 17 points in the first few hours, you can get a heck of a rally. And if it doesn't, you're going to have a sell-off. And the reason I'm saying that is that when we take a look at the ESM, when you take a look at this S&P, what you're going to see here is that you're into the bar that's pretty dramatic. You know, the bottom of the bar is 27.98. The top's 29.05.
Yeah.
That was a monster day, you know. And what you've done is that you've launched all the prices, you know, so it's okay. Are you going to make it?
Sure.
What are you going to do?
Sure.
You know, I mean, there's nothing in between this. It's like, you know, you're going to make it or not. So I suspect, you know, it's only 11 o'clock right now, 10 or 11, I mean. But
yes.
I think that, you know, the next hour and a half, this doesn't get going next hour and a half, that more than likely you're going to get more selling than buying. And that would be divergence, because you can see that the DAX is up 1.3%, FTSE's up 0.6. I mean, Asia didn't perform last night, you know, but, you know, Asia's, you know, pulled back a little. You know, Shanghai, what, 1/10 of 1% after the night before it was up 2.5%, and that thing's hanging at its highs right now.
Yeah,
you know what I mean?
yeah.
So there's a lot of moving parts out here.
Yeah. And you're saying FedEx after the bell? It'd be interesting.
Oh, that would be.
Yeah.
Let me put UPS. Last time we pulled up UPS, had a much stronger chart than FedEx, and I was trying to figure out, like, why. Yeah, it is. It's interesting, man. I mean, you know, 121 to 110. And then if we look at FedEx,
yeah, quite a sell-off recently.
274 to 182. Stay right there, Tommy, and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 130, Nasdaq's up 24, S&Ps are up 8.5, and folks...
you want to talk money? You want to talk finance?
Yeah, your children, get them a baseball glove. That's the bottom line. Get a baseball glove quick.
So the story out there, you have Mike Trout, a center fielder for the Angels, already a 2-time AL MVP. He's 27 years old. He just signed a $430 million extension for 12 years. Going to pay him till he's 39. So he had 2 years left on a 6-year, $144 million contract.
Okay.
So they basically gave him 10 years on top of that to total it where from this day forward. And he had 2 seasons left, probably getting 30 million, 25 million, something.
Yeah.
Nonetheless, pretty remarkable numbers to be guaranteed money till you're 39. $430 million, quite a number for sure.
That is awesome.
And
wow.
Since we're over there, I was going to pull up because I couldn't help. I was just looking at where's our NHL. There they are. The Lightning on a tear as well, man.
Right. Stamkos broke the record.
He sure did, yeah.
Last night.
All-time leader for the Lightning.
Yeah, right.
And then you got Kucherov, who is just at, I think, 117 points, and the next person is like at around 100 right now. Where are our standings? That's what I wanted to get, because the Bruins right behind us as well. We'll pull up the conference, a little sports update to end the hour. So there's the Lightning, one of the only teams that clinched because we still have games. Yeah, so 116-95. 56-13,
wow.
With 4 of those losses coming in overtime. And then just to drill down to the next conference, nonetheless, same deal, right? 95, 94 points. And, you know, what I was looking at, 96 goal differential, 96 more goals over the season. I mean, you look at the competition, just quite a season for even in the other conference. I mean, just a remarkable run. So hockey season, and we got March Madness, right? They just announced the teams. Lots of good action.
Stay right there, folks. We get Fast Market coming up next, and we get our man, Mr. Steve Rhodes, Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.